We'll proceed to group 3, starting with 17.
17. Which of the following is incorrect about reporting entity? Our answer, sir, is letter B. A reporting entity is necessarily a legal entity because a reporting entity is not necessarily a legal entity.
Okay, that's explicitly stated in the framework class that you may be considered as a reporting entity. You may be an entity that will require preparation of financial reports without being considered a legal entity. What do we mean by legal entity, class? Those that are recognized by law to be a separate entity. I'm not sure if you have any idea already about this one, but sole proprietorships class, businesses of single persons do not have separate personality class. You only have your partnerships and your corporations class. There are other types or forms of businesses that are not considered to be legal entities, but they may still be considered as reporting entities. So that's why the answer for number 17 is bravo. Because again, number 17 is asking for the incorrect statement. Let's have number 19.
Number 19. Which of the following is not an aspect in the definition of asset? So, our answer, sir, is letter B, sir. It is stated, sir, in the book. It was stated, what is an asset? An asset is a presenting economic resource controlled by the entity as a result of past events. An economic resource is a right that has the potential to produce economic benefits. So the only thing that wasn't stated in the book is letter B, probability of the expected cash inflows.
Okay, that's correct. But if you were not aided by the book class, I would understand that number 19 is a confusing question. But it would be very easy for us to say that indeed letter B is the only choice that do not belong to the others class. It's because, I hope you read the rest of the chapter class, you may have an asset class even though you do not expect to receive cash. What does letter B tell us, class? Tells us that it's only an asset if there is an expectation of a cash inflow. But that's not correct. You may have an asset, you may have an economic resource, you may have a right over those resources, even though the benefit is not in the form of cash, class. The potential economic benefit class is not always in terms of cash. Not all assets would give you cash inflows, class. So that's how you are going to eliminate letter B from the rest of the group, class. For example, prepaid insurance, class. I expect everyone to be familiar with prepaid insurance. That's one of the most common accounts discussed in basic accounting. When you have prepaid insurance as an asset class, do you expect to convert your prepaid insurance in cash? The answer is no. Your prepaid insurance represents your right to be indemnified, class, your right to be reimbursed. It does not represent the right to receive cash. Okay, best example for a right to receive cash would be your accounts receivable. But again, not all assets promise to give you cash. That's why letter B is not an essential part of the definition of an asset.
Number 21. Potential to produce economic benefits means the answer will be A. Existence of right that it will produce for the entity an economic benefits. It is letter A because it does not need to be certain or even likely that the right will produce economic benefits. But what is necessary is the existence of the right.
Okay, so that would be correct. Let's have number 23.
Number 23. It is a type of obligation that arises from an entity's customary practices, published policies. Our answer in 23 is letter D, constructive obligation. The definition of constructive obligation is an obligation arise from an entity's customary practices, published policies, or specific statements if the entity has no practical ability to act in a manner inconsistent with those practices, policies, or statements.
Okay, so the concept of constructive obligation, class, is that based on your past acts, class, you no longer have a reason to deny or to refuse honoring a certain obligation. There is no contract class. It's more of a custom already. It has developed into a custom that you cannot avoid the obligation anymore. Okay, you have legal obligation, those that are imposed by law, contractual obligation, those that arise from contracts. Moral obligation class does not exist in the business world class. We do not know moral obligation. People in business do not have any morality. That's supposed to be a joke class. Okay, but definitely moral obligation is not honored in business class. Okay, let's have 25.
Number 25, sir. This is the right or the group of rights, the obligation or the group of obligations, or the group of rights and obligation to which recognition criteria and measurement concepts are applied. A. Aggregation, B. Classification, C. Unit of account, D. Elements. Our answer there, sir, is unit of account because a unit of account in financial accounting refers to the numbers that are used to describe the specific assets and liabilities, which are the right and obligation, and then it is reported in financial statements, sir.
Okay. Class, if you read unit of account in the framework itself, class, it may be confusing at first. The best way I can explain this, class, that's how you are going to apply the provisions provided in the standard. You apply it for a particular unit. And the unit for a certain asset or liability class may not always be the same as the other assets and liabilities. Every asset may have a unique measurement of its unit of account. Okay? But you don't have to worry about yourselves, class, if you do not have a deep understanding of this one. It will not affect your understanding of the other standards when we discuss them, class. It's important that you are at least familiar with the phrase unit of account. So that's correct. Number 25 is Charlie. Let's have 27.
Number 27. It is a residual interest in the assets of the entity after deducting all its liabilities. The answer is A, equity. Equity is an ownership of assets that may have debts or other liabilities.
We have actually discussed this already in the previous questions. No doubt the answer is alpha. Considering that 27 is very easy, class, let's have 28 as well.
28. Which of the following is the definition of income? Our answer is D. It increases in assets or decreases in liabilities that result in increases in equity or other than those relating to contributions from holders of equity claims.
Okay, that's correct. Number 28 is delta, class. If it's the first time you're encountering this definition, then there's definitely something wrong with your basic accounting class. You should have mentioned this. You should have encountered this definition already. The definition may actually be very long, but this should not be very difficult to remember and understand, class. Okay, you have an income if your assets will increase. That makes sense. And you also have an income if the result is a decrease in your liability. That also makes sense. Diba, we will be happy if we have an income, class, and we are not happy if our liabilities will increase. We will be happy instead if our liabilities will go down. But you have to understand, class, that the change in your assets, the increase in the asset, and the decrease in liability must not come from the owner's class or for other persons contributing to your equity. For example, your assets increased, but the only reason that your asset increased is because the owner of the company made an additional cash investment. If an owner makes an additional cash investment, will the assets of the business increase? The answer is yes. Managhan ang iyahang cash. But does that represent an income? No, because the increase in your asset came from the owner class or the provider of the capital. So again, you have an income if assets increase or liabilities decrease, but the cost for those changes is not the providers of your equity. It must come from the operations class. Okay? Letter D might appear intimidating. It's long, but it's a very simple and sensible definition of income class. Let's have 29 also.
It is amount at which an asset, a liability, or equity is recognized in the statement of financial position. Our answer is letter C, carrying amount.
That's correct. 29 would be Charlie. Class, you have only been asked to read conceptual framework class. For the rest of the semester, we'll be discussing the rest of the financial accounting standards class, the Philippine accounting standards, and in most standards class, the first part of the standard would discuss the definition of terms. And there are plenty of standards class that would give you the definition of carrying amount. And there may be different definitions for carrying amount class because a particular standard may give you the definition of a carrying amount for that particular standard. But the most common definition of carrying amount class is what we have in number 29. In the multiple instances in which carrying amount is defined in the standards class, you will always see the definition provided in number 29. So this would be the best definition to remember for carrying amount. It is the amount that is reported for the asset, in liability, or equity in the financial statements class. It is the amount in which the assets, liabilities, and equity are carried in the financial statements. That is why it's called the carrying amount. The amount that is carried in the financial statements. Okay? Let's have 31 last.
Good afternoon, sir.
Yeah.
The recognition criteria will require statement number 1. It meets the definition of the elements of the financial statements. Statement number 2. The information is relevant. Statement number 3. The information is faithfully represented. And statement number 4. The information has probable economic benefits. So first of all, the recognition criteria states that an item will be recognized when it complies the following, which is it meets the definition of the elements of the financial statements, and when the information is relevant and faithfully represented. However, in statement number 4, it is not part of the recognition criteria. So the answer is D, none of the above, since neither A nor B nor C comprises statement number 1, 2, and 3, which are all part of the recognition criteria.
Okay, that's correct. The answer should be 1, 2, and 3. Okay, that's very important, class. You know already that 1 and 2 is part of the answer, class. Okay, you also know that 2 and 3 is part of the answer. But your answer should not be alpha or bravo because choices A and B tells you that it's only 1 and 2 or 2 and 3. But the best answer is 1, 2, and 3. Is that clear? If the word only was not in letter A and letter B, class, you could have argued that they are correct. But because it says only, class, that makes the alpha and bravo wrong, class. The best answer is 1, 2, and 3. And it is not in the choices. That's why the answer would be delta, class. So group 3 got all the questions correct.